99% of people fail to make money in the stock market, but here are 5 ways that'll almost guarantee you success if you follow each one. So let's jump into them. Number 1, you need to stop blindly listening to people because this is a great way to lose a ton of money really fast. And I'm saying this out of experience because I've lost quite a bit of money this way. It's really easy to get excited about making money when you open up Twitter or YouTube and see people hyping up specific stocks or crypto. This triggers you emotionally into believing you can make a bunch of money fast when in reality, you're way more likely to lose it. And this is definitely something not talked about enough in the crypto space. I think most people buying into crypto are doing so solely based off of other people hyping stuff up without them actually understanding what they're getting into. But the same can be said for stocks. Don't just invest in something because someone managed to get your money emotions flowing, but invest because you've looked into the company behind the stock and it's something you truly believe has potential. One of the best questions you can ask yourself before investing is, how many hours does it take me to earn the amount of money I'm about to invest here? Is it worth throwing all of those hours into something that you don't actually understand just because some dude on Twitter with an agenda says that it's a great investment? Number 2, you gotta avoid being emotional at all costs. This is where the most amount of people lose the most amount of money. Don't just panic sell out of all of your positions because the market had 2 red days in a row, because guess what? Tomorrow and every day for the next week, the market could be green. Even if you don't think you'll panic sell, one of the most important traits of a successful investor is staying neutral no matter what's happening in the markets. Don't let a red day bum you out. The value of my account, as with so many other people's, are down huge this year compared to last, but I don't really care. I'm invested for the long term, and each of the stocks that I've added to my portfolio, I believe will do well over time. And because of that, day-to-day fluctuations in the value of my accounts have very little effect on me. Number 3, consider investing for the long term. This has proven to be the most successful way for the largest number of people to win in the stock market, and it's the way that I invest myself. Instead of trying to time the market by buying and selling in the short term or in the span of less than 1 year, it's much more likely that you'll be profitable by investing with a long-term mindset. There are a ton of different strategies for long-term investing, like dollar cost averaging, which means you invest a set amount of money consistently no matter what's happening in the markets, whether it's up or down. An example of this would be putting $300 a month into SPY, which is an S&P 500 index fund, or it could mean investing that $300 per month into dividend paying stocks as part of a strategy to build an income producing portfolio. Now, I really like that second strategy because you get to take advantage of the unbelievable power of compounding, which we'll talk about in a second. Just to put in perspective how holding for the long term can be really beneficial for you, since 1957 up through 2021, the S&P 500 has returned a non-adjusted for inflation 11.88% return annually, with several of those years having negative returns. So not only are you excluding yourself from building true wealth over time, unless you're an extremely skilled day or swing trader, which is very few people, but you also are going to be paying higher taxes on those short-term sales rather than if you held for longer than 1 year. This is because if you sell a position that you've held for less than 1 year, you're taxed at the same rate as your W-2 job. But if you hold for the long term and sell after 1 year, you have the potential to pay no taxes on those gains whatsoever. If you make less than about $44,000 per year, there's a 0% tax on those long-term capital gains. But between about $44K per year up to $490,000 per year, you're still paying a max of 15%, and above 490K, you pay 20%. Now, another downside of short-term trading is that you don't get to take advantage of the 8th wonder of the world, and that is compound interest, or in the case that we're talking, compound dividends. Dividend reinvestment is a beautiful thing, not only because you're building a greater position in that stock, but every next dividend payment is greater than the last, which if you keep it up, will eventually snowball for you. Now, keep in mind that long-term investing is not the only way to succeed in the stock market, but it is the most likely way. Now, there definitely are people making a lot of money day in swing trading, but it does take a lot of time to build those skills that most people don't have to be successful. Now, I'm always an advocate of trying something if you're interested in doing it, no matter if someone else says it's a bad idea. So if day and swing trading really is interesting to you, try it out. Number 4, you need to be patient. Many people make the mistake of buying high and selling low, which doesn't really make sense. Why would you be buying high and selling low? That's like being uncomfortable with sales at the store and making sure you avoid buying at all costs, but then when everything is full priced, you feel excited and you're ready to buy. Well, you'd actually be surprised by how many people do this when it comes down to investing. Circling back to being emotional, whenever the market starts to decline, many people get fearful, sell out of their positions prematurely, and then when the market starts going up, things are green, people are excited, they start to buy back in. So if you want to be ahead of the majority of people, you gotta do the exact opposite. One quote that sums this up perfectly is by Warren Buffett, and that is to be fearful when people are greedy and greedy when people are fearful. And I don't know about you, but I've seen a lot of fear this year. I'm still buying stocks and I'll continue to do so even if the market continues to decline because I'm in it for the long term. Number 5 is more about risk management than anything else, but it is one of the most important. Make sure that you can afford to lose any amount of money you invest. The whole point in the first place is to make the money you have go further by working for you. But if you're really tight on money as it is, maybe now is not the best time to invest, and that's okay. Prioritize paying down any consumer debt like credit cards, focus on building up an emergency fund, but most importantly, focus on increasing your income so you can get to the point where you have enough coming in that you can comfortably invest, even if that means just starting out with $5 a month. In the meantime, continue educating yourself so that when the time comes that you are ready to invest, you can get into it confidently. Thanks for watching and peace.